Look at this chart for a moment. Not because it's impressive, but because it shouldn't exist. Moves like this don't show up when the system is stable. They show up right before something changes. And what makes this uncomfortable is that this exact setup has already appeared multiple times in history, and every time, people ignored it. What's happening right now isn't loud. It isn't dramatic. It's quiet, confident, and happening in places most people never look. And by the end of this video, you'll understand what's repeating, who has already noticed, and why the warning signs never feel dangerous until it's too late. If you care about understanding markets before they make headlines, subscribe. This channel is built for patterns most people ignore. For most of the last century, financial cycles followed a predictable pattern. Growth slowed, risk built gradually, and excess took time to form. When things broke, it felt sudden, but the groundwork had been laid years earlier. Today, that pattern looks different. Not because cycles disappeared, but because they've compressed. Growth is faster, narratives spread instantly, and risk builds quietly, while attention is elsewhere. And that's why this moment matters, because once markets become convinced that risk has been tamed, history tends to repeat itself. The first warning sign is valuation detachment. Assets are no longer priced for realistic outcomes, they're priced for perfect ones. This has happened before. In the late 1920s, investors believed productivity would eliminate downturns. In the late 1990s, technology was supposed to rewrite economics. In the mid-2000s, housing couldn't fall nationwide. Different stories, same mistake. If this feels uncomfortably familiar, hit like. It helps this video reach people who still think this time is different. When prices assume the future will cooperate, even small surprises can trigger large reactions. And right now, expectations aren't just optimistic, they're fragile. The second warning sign is silent institutional behavior. Major downturns don't begin when panic spreads. They begin when confidence quietly shifts. Institutions don't ring bells, they rebalance, they hedge, they prepare. This happened before the dot-com crash, before the financial crisis, long before headlines caught up. When the largest players in the system stop acting certain and start acting cautious, it doesn't guarantee a collapse, but it does mean the future feels less trustworthy than it used to. And the third warning sign is the most unusual. Markets are disagreeing with each other. Normally, assets move in coordination. When confidence is high, risk assets rise, and defensive assets fall. When fear rises, the opposite happens. But right now, everything is elevated at the same time. Stocks are priced for strong growth. Defensive assets are priced for instability. Bonds are priced for uncertainty. This rarely happens in stable environments. It creates a situation where optimism and anxiety coexist, where different parts of the financial system are preparing for completely different futures. And historically, that tension doesn't resolve gently.
But here's what this doesn't mean. It doesn't mean a crash is scheduled for tomorrow. It doesn't mean the system is about to collapse. It means clarity is gone. This is exactly the phase where paying attention matters. Subscribe, because what comes next in this cycle won't be obvious, and we'll be tracking it here.
History doesn't repeat because people fail to study the past. It repeats because human behavior stays the same. We trust narratives when they're convenient. We ignore risk when things feel comfortable. And we assume warning signs will be obvious. They never are. The most dangerous moments in markets aren't filled with fear. They're filled with confidence, distraction, and the belief that nothing needs to be watched closely anymore. That's how every major cycle ends, quietly at first. If you don't want hindsight to be your only signal, stay connected to this channel. And that's why this matters. Not because something dramatic has already happened, but because the conditions that usually come before it are lining up again. History isn't repeating loudly, it's repeating subtly. And by the time everyone agrees it's happening, it's already too late to pretend it wasn't visible.